Hi, welcome. My name is Kim Næss. I'm a marketing science director. Not at GroupM, as it says in the invitation or the agenda, but at Acceleration. We are actually changing our name in these days. And this is my colleague,
Andreas. Thank you, Kim. Thank you. So I'm having the same role as Kim, but focusing down on the Swedish market and clients we're serving from Sweden.
Thanks. And so the goal of our session today is something I think most organizations are keen to know, and that is enabling growth. And how do you enable growth? Well, you need to be able to show your brand, your product, your services, whatever you do. And how do you do that? Well, you talk to a marketing agency. Now, Acceleration is part of WPP, and WPP is a worldwide leader in marketing, media buying, PR, communications, etc. More or less 1/3 in ads globally that you see on Facebook, Insta, newspapers, TV, etc. goes through our books. And we have a commitment to that because we want our ads, infomercials, information about product, services, clients to be relevant to whoever we are speaking to. And we want our clients to feel that they are spending their marketing budgets as optimal as possible. So, one of the things we're launching in Acceleration is that we are, through WPP and GroupM, the world's largest and longest standing partner for Google in marketing. That's a statement, and I'm just going to leave it there. Within the Nordics, we are also helping drive that growth for a lot of large clients, and I'm pretty sure that a lot of those clients are here present in Kistamässan today. And we're very happy about all these customers. About 80 to 90% of them are recurring customers year after year after year. So these are not something that is just for 1 year and then they're gone. So why the one-stop data shop is dead? Well, if you look at the media perspective, and this is for a person 25 to 65, that's approximately my age, in between there somewhere. In the days before, it was a lot easier. There was not a lot of media channels to surveillance, to look at, to monitor and to govern, and to understand. So seeing here and seeing the TV, the internet, radio, direct advertisements, magazines, etc., that was quite easy. It wasn't too much to really watch, making sure that your ad became relevant and that the people and the segment that you wanted them to be shown to actually saw them. But that landscape is changing, and it's changing rapidly. It's hard to imagine that this is something that we're seeing today. And we're not stopping there. We're going to see more and more channels really overcrowding the market. So for clients today to try to understand where do I put my effort in to making sure that my service, my product, my brand is being shown to the segment of the audience that I want it to be seen, that's just becoming harder and harder. Now, we can help with that. That's one of the key things we are good at, is enabling our clients to see into or see past their media buying and their sales and their revenue to really understand where is the optimal ROI for our media buying, for our marketing budgets. Part of that is also driven by a lot of marketing technology companies. 2011 up until today, that growth, it's about 5,233% in new players, niche players who are delivering value, I'm pretty sure, or a good idea at least, of something that is clever, smart to do, etc., within the marketing technology space. And we, as Acceleration, we need to be aware of a little bit of that landscape, maybe not all of it, because that's a lot, but we need to be aware of what is happening so we can be good advisors to our clients to make sure that they are being seen, understood, valued, gauged, whatever, for their marketing efforts. Now, what you can see in Google Analytics, so Google is the big one, and we are a big Google partner as well, and we will be a good friend to Google. But what you see in Google Analytics, that's just a small portion of the cake. That's what you are spending in the Google ecosystem, YouTube, Google, etc. But the true media effect of where you're actually putting the money. It can be magazines, it can be out of office, out of home, etc. To be able to understand that full picture, you need someone, you need a partner who can actually help you get a holistic view of every marketing spend that you do. And why is that important? Well, to take an example, we've just had a pandemic. Luckily, we seem to be finished with it, or we're getting at the afterburn of it, at least. But this was important for us to really take seriously, to be cautious at, and to have respect for people who had fear of coronavirus. Now, you can take a funny approach to advertising, and like, hello, is it me you're looking for? And the early stages of the pandemic, people were hoarding their toilet paper. That's okay. You can have a little bit of a joke, a little bit of a banter, and we can help you tell if that was well received or not. The worst part is if you're actually going like this, and it's a pub chain in New Zealand going like, well, let's be honest, there are worse things you can catch in Hamilton than Corona. So the Coronas are still on sale. That's a bit tacky, isn't it? We can help measure, gauge, find sentiment analysis as well for how your marketing and how your media spending, advertisements are being received at the public, so that you can be more successful, maybe like Starbucks. Be thoughtful and measure everything that you do. And luckily, we have a toolbox for that. And that toolbox, Andreas will take us through and explain.
Thank you, Kim.
Good luck.
You. So I'm going to be quite transparent now. I mean, I've been in the industry for, I think, more or less a decade. I've been at the consultant side, I've been at Facebook, I've been at Spotify, now I'm being at GroupM. So I think I've seen like most sides of the industry. I mean, more or less the toolbox that everybody's using is containing the three parts I will present to you right now. So I think this is things that's not related to one specific system, one specific provider of these services, but more or less, I mean, the kind of things we're seeing as concepts are these three. So the three ones are econometrics, which is a very good way of kind of covering the kind of holistic part of the business, understanding how marketing is driving a business versus all other factors. Another aspect is regarding experiments, which is a more accurate way of predicting outcomes or seeing outcomes of different kind of scenarios that you put up in a more experimental setting. Then we're having what we call algorithms, which is more vague word for different kind of use of AI and more real-time application of data to generate effect on your media buying as a digital buying in real time. So I will walk you through all these kind of three concepts and a quick kind of case on those, just to highlight how we work with them. And I would say, I mean, what we're doing is more or less what the entire industry is doing in these areas. So econometrics, starting off with the holistic one. I think this is a very good approach to use just because they're covering the kind of full range of all the factors driving your business. So typically when we look at the econometric approach for an advertiser or as a kind of B2C company or B2B company, you're looking at all the factors that's driving the business. Of course, media marketing being one of them, but you're also having, I mean, things you're doing within your own channels, so such as like CRM sendouts, you're having PR, etc. You're having what the competitors are doing. You're having the external factors being, for example, the weather, the seasonality, the different trends on the market, all these kind of things. And you want to understand this, what's driving the business, both on a short-term as well as a more long-term basis. And to unify all this data, because it's quite complex data, but this is actually what we're looking at. This is a true case I'm putting up for you right now. So to unify and look at all this data, typically we like to look at data over time. So you're looking at different points in time, what's happening on all these different perspectives. So what's being put in paid media, what's being put in organic media, what they're doing in other kind of factors, and putting that in on a timeline. And typically what we've seen where this kind of data unifies the best and where the kind of signal-to-noise ratio is the best has been on a weekly basis. So looking at the data on a weekly basis, sometimes a daily basis, makes sense. And then once you have those time series set up with the data, you can apply any kind of regression-like methodology or AI to that just to kind of get these answers. Key things you're after seeing here is, of course, a full breakdown of the business. So you're looking at all the factors that you had in your model and map those out, how those are contributing to driving 100% of this particular business you're looking at. So you want to kind of split it down by, of course, the traditional marketing mix, the 4 Ps, also understanding, for example, the seasonality and the external factors, as well as, for example, the brand equity, which is an important dimension as well when running marketing. So having this kind of breakdown is typically one key thing you like to see as a business executive to understand what's driving your business. And then also based on this, you're mapping out different scenarios. So what if we do this for this particular factor? It might be the media factor. So what happens if we increase the investment in TV? What happens if we decrease the investment in search? And those kind of questions. And there you can typically use this regression-like model you built just to kind of simulate with the parameters there what these scenarios would mean in terms of increasing or decreasing the business. So this is typically where we're seeing that we identify either cost savings or growth potential for a business at a very kind of strategic perspective. Sorry, you can. Second one being what we define as algorithms. So here it's stuff that's happening more in real time, more generating effect, every kind of millisecond that ads are being shown. And actually this is an area where it's quite good being within marketing, because we're being an industry that's being driven by Google, Facebook, Amazon, all the kind of major tech companies out there are having their main profit coming from advertisement. So typically the APIs they're having, the tech infrastructure in this space are very good for doing smart things. So there we're working with different kind of API modules we're setting up, or you can also work directly with the platforms in applying different kind of logic you might identify that's being good for a business. So it might be that they're selling more when it's raining. Then we can monitor whether it's raining or not, and then push ad when it's raining. That's a very, very simple use case that's extremely easy to do. Or it could be that, when something is happening on the TV, when it's being different sport events, different leagues, when you want to target a specific kind of geographical location, all those opportunities are extremely easy to implement on these platforms. And just to provide you with one example, we're actually seeing very good results is by monitoring trends that's being out there on the market. So having this one, for example, for a client, which is a major retailer within sports. So they want to understand, when to kind of push what in their categories. So when do you want to push skiing, when they want to push like paddle, when they want to push football, etc., etc. And one way to monitor this and understanding this is to look at all the different searches that's being made organically on Google. So when people start to search more for one specific search term, then we know it might be an idea to kind of boost that category. And the way we kind of build this logic up is by looking at historical data and by using AI neural networks, identifying the underlying dynamics here. So we know, for example, when one search term is boosting, then we should boost this particular category. And that might be relationships you might know in advance, or it might also be things that you maybe might be surprised about. So it might be like a search term like, I'm not sure, paddle might be boosting suddenly. Then you know that maybe we can see that has historically been linked to that you're selling more shorts and t-shirts. And then we know that we can boost those, if that makes sense. So this is a good area as well, that we are very fond of and use a lot. The third category being experiments. And what's so good about experiments is that you're looking at something and setting something up to try something out in a very good way to know whether that's a good idea or not to scale up. And we typically tend to do these experiments in a very kind of proactive way, setting up an experiment and then look at that outcome. But I can just show you one case that is public, which is from Adidas, where this was before we started working with them, because we're working with them right now as GroupM. But before they started working with GroupM, they had this strange event happening in Latin America. So I think in Brazil, it was their search ending that was being put down. So from one day to another, they suddenly stopped investing fully within paid search. So there was some kind of technical issue, I think, related to that. So the search account broke down, and the search went from high levels to being 0. So that's like, in a way, an experiment, because you're having something that's happening, and you can observe the outcome. But in this case, they weren't actually seeing that the search account was being put down. They didn't see that in their sales numbers. So they did invest much less money in paid search, but they still were selling as much as they did before, which is, of course, quite embarrassing. I'm a bit surprised why they're pushing this out in the papers, but anyways, that's an interesting fact that they're doing it. So, these kind of dynamics are out there, And of course, you don't want to see this afterwards, identify that you've been stupid or doing something wrong, but you want to be proactive on this. And the way we're doing those kind of experiments, I will talk you through in a bit, but I just want to, before that, show you, I mean, what we're talking about right now is actually perceived, of course, as the kind of, what you may define as the, what's it called? The best practice in the industry. I mean, if you're working with experiments and looking at stuff from an experimental basis, you would always have this kind of causal perspective to it. So you don't look at historical data and see observations, but you're looking at actually true causal impacts from doing something in a strategy. And this doesn't go only for marketing. Of course, you heard about experiments before. It's existing in a lot of industries and use cases. But typically, what's so good then in marketing, and going back to that Adidas case I just told you about, or another case, but on the same topic, because you don't want to see after that you actually been stupid in making decisions, but you want to proactively identify this. So typically what we tend to do quite a bit, or doing very much nowadays, is running geographical experiments. So we're running different strategies in different regions, and these regions we select in a smart way. So we're selecting regions that makes up groups that having very good similar behavior that actually can compare versus each other. So when we're having a market, you can identify these regions mathematically. There are different approaches to this, either through running like principal component analysis or other kind of AI approaches. But you identify these regions and you apply different strategies in them. And then you can observe how they behave. So for example, in this particular case, coming back to a marketing sample here, we're seeing, but before they run the experiment, they were having one particular level of paid search coming in. So people that are arriving to their site and buying stuff by first searching for a search term and then clicking on that paid area, being the ad area in Google search. And then we're having one line there representing the people that are coming in from more, the black one is organic search. The black one now, organic search, are people searching for that search term and then clicking on a non-paid ad to get to that site. And of course, it's much cheaper getting people in from organic search, which costs 0, compared to paid search, where we're paying per click. And what we can see here, when trying a strategy in the regions, taking away some of that search term and search activities, was that we were having, when we saw the drop in generic paid search, we saw also an increase being approximately as high in this organic search. So people that weren't arriving to their site through these kind of paid search ads were instead arriving to their site from organic search ads, which was, of course, a very good perspective to see, and something that they can see that after the experiment run with this client, they can scale up the strategy and taking away even more money from paid search. So complex history, but long story short, there were a lot of savings identified here by just running these experiments and try to take away stuff and experiment and see how that had impact on the business. So those were the 3 things that are the absolute, I would say, most used concepts within marketing to work with media effects. Kim, can you wrap it up?
Yeah. And so one of the key things, and we started off with this quote on the name of our title. Half the money I spend on advertising is wasted. The problem is I don't know which half. That was 150 years ago by a guy named John Wanamaker. He was a department stores entrepreneur. He started a lot of those, and he wanted to make sure that they were being seen, heard, etc. Now, I'm pretty sure that today, 2021, half of the money that companies spend on advertising are not wasted. But as the examples, as we walked you through here now, shows that there are still a lot of optimization that is that is possible to do, and on so many small new levels as well. It's keeping up with the change. It's keeping up with the technology on what you can do and how we can help you. So examples, econometrics. Usually, if you do an econometrics project with us, 20 to 25% ROI. Algorithms, 15 to 40%. But those are, of course, not the entire marketing budget. It's based on those experiments. And experiments itself, 10 to 25%. In the sum, that can make sure that your companies are investing a lot less than what they need to, or optimizing what channel they actually need to invest in. Cool thing is, We are having a lot of interest in these services. There's a lot of people coming to us and wanting to understand more and wanting to be more educated in what they do. So we're in need of more data scientists. We're in need of more data engineers. We're in need of more business consultants. So if anyone's interested, come speak with us.
Please do.
Any questions as well? We are over time, so I guess that's good. Thanks a lot.